YouTube, what's going on? So, kind of just to recap what we actually saw through today, kind of we were talking about yesterday and everything like that. So, did end up hitting these failure swings, kind of reacting off of just London low, London session, everything like that. Ended up trading up into this fair value gap up here as we were kind of going into London and especially New York itself. After the news at 8:30, it creates a very, very large range candle. Now, why is that important? During the news impact, also hitting your higher time frame PDA if you really want to go there. Poking above this high here is forcing everybody that has been long since double bottom London to now buy at a very, very high price. Very, very high price. So as you're going into New York, you're able to sell this above here. And even if you don't have that and you don't see the turtle soup immediately, you then get the low that broke this high at this blue line here, getting closed below this candle here. Now, why is that important? That's going to allow you to show a true shift in delivery. Now, before you say, okay, well, what about here? Where's the high getting ran? And even if you get something like here and you're delivering bearish, that's fine. It shifts back bullish, low that broke the high at this candle here, and then proceeds back bullish. So if you're going to be using just the chart, that's fine, but you absolutely need to factor in time and more so economic new drivers that are set to release at a certain time. Now, because being able to sell up here, like we did this morning, as we were going into 9:30 open, we had a fair value gap after bearish shift. And again, if you really, really want to, turn off wicks and just focus on bodies. You can see FEG on body, still marked even though there's wicks. Market trades are up into it and then sinks lower. From this moment here, you're going from buy side of the curve, your shift is here, you're now on sell side of the curve. So what should be happening? Even if you don't take this as an early 2022 and you get this here, this is clear bearish shift. We are no longer worried about all of these candles here. The down close that were supposed to support price are failing. And how do you know that they were supposed to support price? If they needed to come back for these orders, they would have. Meaning if this was really an internal long setup to continue going, it wouldn't have found a need to, for example, sweep this low in turtle soup and then continue higher. It's only going to keep turtling in the one direction that it needs to until their net position shifts and then they no longer care about it and then they'll slice through it all. So yes, you have bullish turtle soup here. You're running failure swings, hitting bissies, all the way up, hitting order blocks, all the way through this delivery. That's not changing at all. It's only at the point where you reach here, low that broke the high, failing, getting closed below is when you actually see the shift. And even if you want to say that you see the shift here, that's fine. It shifts back bullish immediately. From this point on, no up-close candles were broken at all. Literally none. And there was a clear large displacement on 9:30 itself. And then trading back up into fair value gap up in here. Just kind of sitting here, lingering around. A lot of people thinking this is RTH Judas down, anything like that. But if you're just following the actual structure and the candles themselves, you're on bearish delivery. Your up close candle should be getting broken if you're bullish, and your down close should be supporting. In this case, we had up close supporting after our shift. Trades up into the order block with the turtle soup paired with it, paired with the FEG as well. So every strong indication that an order block needs for a high probability one. So even if you didn't take this up here at the high, there's your low risk sell right there. And even if you didn't take that, that's fine. Start playing out the structure. You get an FEG, trades back up into it, IOFEDs. Also, these failure swings here getting swiped here. What is that for? That's only to stop out shorts. You only stop out shorts to go short. That's it. That's the whole reason you do it. You get another fair value gap, IOFED, and then market sinks all the way lower. You get another IOFED here. So another FEG continuation idea. Even though this FEG here is present, you're already pushing down through this. You should be looking at this one to continue through the distribution. And only at this point here is when it fails, and then your order block inverts and all that good stuff. And then, yes, high that broke the low, this high here, breaking this low. This low getting broken came from this high, closed above. Okay, now you can be bullish. So then what do you look for? Down close support, BISI's continuing, all that good stuff. So after this break here, with your being your shift, again, back the other way for bullish, you have a BISI here to enter off of to either mitigate your short or just go completely flat. Now, it ended up being just kind of an internal run, which is totally fine, just based on the higher timer, because this hovered right above previous week's low. It didn't actually take it. So if you're making it 99% there, you might as well be there to crush it later. And again, you can apply the exact same thing again. These two equal highs here, where does it get broken? It gets broken on this candle here at this high. Where did that high come from? That high came from this low here. Close below, FEGN retrace, delivery shifting back down, you're now bearish again. You can use this every time on repeat. And you'll essentially just use POIs or higher time frame P arrays, whatever you want to call them, to look for that shift or to anticipate that a shift can occur there. And again, even on the 15-minute, it just looks like it just comes right into a 15-minute order block. And that's how you're going to be using the higher time frame to help differentiate when you're seeing the shift. Because yes, you see a shift here, you see a shift here. You're going to see it back and forth if it's just bouncing off of FEGs. But it's the anticipation of where that can occur, and then what does that actually look like when it happens. And so you get this here, and now you should be seeing what? Up close candle support, SIBIs. So you're on buy side of the curve, you shift here, now you're on sell side of the curve. What should be seen on sell side of the curve? Up close candle support, FEGs traded into, and even this chop here, which I'll admit I got caught on being, I was emotionally just out of it. But even looking back in hindsight, this flip-flop, the up-close candles trading up into here were never broken at all. This is your range for your up-close candles here. Nothing ever broke, even remotely came to it. It may have looked cautious or looked like it was a stop run or anything, but that's just how people get trapped. And then immediately sinks through. FEG continuation again for the heavy distribution to see a new low. FEG trades up into it again here. All this one here sees a new low, and then finally gets inverted and traded through. But again, that shift or that high that broke the low idea should be seen. And that's what you can use to anticipate delivery shifting. And then you can just literally sell that high being broken if you think that's a spot, or if it's a news drive or whatever else it may be, to, or like in this case, force people to buy really, really, really high. As for oil, it's kind of the same thing. It ended up doing what I was worried about, or I was more inclined to, which was run all of Monday's sell side. So as we have midnight open and all that stuff here, you left two equal highs on London, which is fine. All trade above midnight open, just extra sell side generation. This collapse here at RTH open at 9 is essentially a great way just to kind of shuffle people. So 3 candle model here is what we ended up doing, because this was Monday's RTH low, when this was not futures low, but RTH low, so 9 a.m. to 2:30. This low was getting hit on this candle, so literally 3 candle model right through there. You trade for the long setup, so I ended up exiting over there, and I was very much so early on what I was preaching. I bought this order block here after 9 o'clock, just kind of the move down, just to kind of bounce and ideally run for these highs. Ended up swinging lower, but again, did not follow the rule. FEG continuation or SIBI continue. I saw a new low off the range, and even one here. This candle here at 9:15 trading into it and then producing a new low. That got rid of all of the SIBIs at the range, also while, again, running Monday stops. And I did realize it as the market was trading to it, so it was just me being early, way too early. But able to exit everything above that 3 candle model and all that good stuff. And again, second verse, same as the first. Back to the 15-minute. Clearly bearish, sell side delivery, right? Shift here, boom. Okay, your sell side of the curve. So then what should be happening? Up close candles should be supporting price. And again, preach it until you can see past it. Turn off wicks. Look at the up close candles. You could argue that they're being broken here, and you're getting the down close support. But after this, your delivery shifts back bearish, and then you're caught with a dealing range like this with an FEG. So you basically just get an internal run into the FEG here. Because even if you want to say, okay, you're bullish here, that's fine. That's totally fine if you want to say that you're bullish here. However, you have to then be willing to change and adapt to say, okay, well, this is now back a bearish break with our higher time frame already being bearish because we can run all this sell side here. So end up just being an internal run, kind of just sink lower and everything like that. And again, look for high that broke the low, all the good stuff. Find the delivery shifting every single time. And you do it enough times, you'll be able to see it, and then you can see it ahead of time. So if you're hitting your 15-minute FVG here, this high here, breaking this high, came from this low down in here, getting closable, you're now back bearish. And again, your up close candle for actual movement that would be considered higher is this candle here. Now it does get closed above, and that's totally fine, but it gets immediately rejected and then starts to deliver back through. And it's one of those things where, especially something like a higher time frame, going up like from a 3 to a 15 if you're intraday can extremely save you. Because you can see you're just filling in this candle, and then this up close candle here, this last one, completely so hold it at 50% and all that good stuff. And then after inventories, it just crashes through it. Because that was the main draw anyways, was that. Because really all I wanted was London highs and then reverse back through it. Maybe that breaker, but even then, it was a counter trend long setup with higher time frame essentially being bearish. But that's the idea that you want to be looking for. It's like high that broke the low, low that broke the high, and then going from there and trading that until it breaks. And then having higher time frame areas or objectives in mind to go for. Because even like a 1 hour, it looks even better. Not a single up close candle was broke at all. Order block here. You get some wicks past it, sure, but in terms of the actual up-close candle, literally nothing broke on oil at all. And it's one of those things where on a smaller time frame, if you go small enough, you can find a clear bullish break high that broke the low, low that broke the high as a pattern, but the actual higher time frame is what needs to keep you out of those, basically those fake shifts. And just going up 1 or 2 time frames. If you're watching on a 3 or a 5, go up to a 15 or an hour or a 30. Just to help clear some of the confusion. Because again, even this on the 1 hour Nasdaq, where's the up close candle being broken? This is your last up close candles here, these two here, and even this one if you wanted to go there. Where does it get broken? It literally doesn't. It literally doesn't at all. So after crashing through it, your bodies are back bearish. Get basically a breaker set up here, and then you can continue playing it for previous week's low when you're already on sell side of the curve, because you were sell side of the curve since Tuesday London. So that's kind of the little gem I wanted to throw out there. But that's really the things that you want to be looking for and kind of using the higher time for to help dictate if it's a true break or not. But when you're actually looking on that chart, that time frame, look for that high that broke the low. And again, once you have that shift, like PM session, not a single up close candle is broken afterwards for the rest of the session till like 4 o'clock. And at that point, you're done trading for the day. So, and even if you, like I said, you want to say this is your bullish break here, or you want to do like something here, that's fine. Stay bullish, but then at some point the delivery will shift back. And that's what you got to be either A, ready for, or be willing to, more importantly, be willing to exit and adapt to either your higher time frame delivery or just your delivery flat out changing. Because if you're bearish, up close candles are going to support and SIBIs are going to continue every single time. It doesn't matter. Every single time it's going to happen. So that's really what you want to be looking for. and being willing to trade something until it fails, and then being willing to hop over to the next thing and then going from there. And that was really the big thing that I kind of wanted to reflect on today, considering I was trapped long here and just over leveraged, even though kind of by here we pretty much knew where we were going, especially when we were like down here, like around 10:30. We basically could run down to this low at 11 at the time that ended up doing it. So, and that's one of the things that I've been really working on trying to hit home as a trader, is being able to see that stuff in the moment, because it really doesn't matter if you, like even me, I literally sold this high up here, and it looks great on paper, and I can show you the sell if you really want to see it, but it really doesn't mean much when you enter here and you exit right there. It really doesn't mean a whole lot now anymore. So that's kind of the things I've been working on. And again, I also swap long, which was the mistake there, even though this delivery is now clearly bearish. But it's just one of those things in the moment you don't see it. That's really the main thing that I want to work on and try to hit home with. And just for people to help see in general, how can you even see something like this in the moment? And the first way to see is you have to see it in hindsight afterwards, admittedly, before you can even see it ahead of time. So that was kind of the whole gist of what I wanted to cover today. I definitely want to try to be more active with everything and just try to give some actual information that people can find useful, and ideally get some thumbnails too. So if anyone knows a guy, email me or something. We'll work something out for some thumbnails. But other than that, the delivery itself will literally flawless, as it is always. So I will see you guys in the next one. Be sure to like, comment, subscribe. If you have any video suggestions, just throw it in there. I will do it for you, no problem. I can pretty much talk about everything for you.